Good morning. Tuesday, August 5th. I'm Zach Howard. Here's my morning market update. We have another opportunity today to embrace failure, to embrace mistakes and get better. That's what life really is, whether that's playing sports, trying to be a better husband, dad, coach, or playing the markets, investing. And there's one thing I know, the longer I try, the more I make mistakes. And it always gets harder, but that's what life is. That's how you get better. And what we can learn to get better on is taking notes of data, taking notes of our performance, taking notes of what our thoughts are. That's part of my daily process. It's frustrating to make mistakes, but that's what makes it interesting and challenging and why we keep at it. Today, I'm rocking the Bitcoin hat because let's focus on Bitcoin is the biggest thing in my notebook, and it's going to continue to be because I think it's the most interesting asset class out there, and it front runs the macro regimes. We've had consolidation in Bitcoin price as the volatility has come down here in the last week. We've seen some of the altcoins and the higher beta trades get flows from Bitcoin and those Bitcoin ETFs that otherwise were going there. However, let's pay attention to the fundamental side. Is each week we're looking at the Bitcoin Treasury Company adoption, and the rate of change there is up and to the right. Last week's data, here we go. Great follow on XBTCNL Nico. He puts out some great tweets. I looked at his information. Here we have a summary of last week 64 company announcements in that Treasury space. 33,300 Bitcoin added to corporate treasuries, the big one being Sailor Strategy at its IPO'd offering last week. We had 3 new companies, future plans for another 8.8 billion with a B, 15 additional company disclosures. 3 new companies, 25 companies are adding, and 11 future companies. The momentum continues to be in this 55 to 65 each week of announcements. And we start this week again with some fresh new companies I hadn't heard of in the last 2 days. Even last week, we had a gold mining company, I think it was in the UK, added 20 BTC to its treasury, hardest money, Bitcoin alongside gold. Tech companies, we had 32. We had a financial services companies. And even today, I've seen a power energy company in the US become a new treasury holding. So it's a broad-based adoption. It's not just failing companies that are trying to say, hey, I'm going to rebrand myself as a Bitcoin treasury company and get the flows and get the investors in. It's companies that realize the reality of the math. The hurdle rate is Bitcoin in its continued appreciation year after year, up 95% here on the year currently. If your IRR based on massive overhead, having thousands of employees, HR departments, lawyers, real estate, everything that comes with that, and your IRR to your investor is still less than 7, 8% a year, why are you doing what you're doing? Why are you operating a business in that inefficient manner? Why don't you just adopt Bitcoin using that fiat strategy? Is what this trade is and what the opportunity represents. 25 companies adding Bitcoin last week. That is a 42% increase week over week. That's what I look at in markets, the rate of change. Here you can see a summary of the different industries. Tech, like I say, global finance and clean energy. 10 companies total planned investment in the future for an additional 8.8. Really the limiting factor of how fast some of these companies can scale their treasury holdings is in the regulatory requirements, whether that's SEC, like you have Nakayama, Conley MD merger, which is going to clue up here in the middle of August, I believe. Until those processes play out, a company, despite all their plans, they can't actually get out there, promote it, and enact it. It has to go through those timelines. The second limiting factor to some of these companies is where they're domiciled, where they're listed to. A lot of them are in the Canadian exchange, and is the Canadian investment community up and be able to support these private placements and these continued at the money offerings to scale as quick as some of the companies would like. And that has been the limiting factor. The MNAV of some of these companies has pulled back significantly over the last couple of weeks. As I said, the volatility has come down, and Ethereum, Solana, altcoin type other alternative higher beta trades have got some of those flows. I do not see that as a lasting trend, and it's more a flavor of the day. Uh, like I say, the strong bullish sentiment continues to be more and more adoption each week. Monday is usually when you see the announcements come out from these treasury companies, and I would expect this number to increase past 64 in the week ahead. Zooming out, like I say, it's up 95% on the year. We pulled back about 5% from all-time highs, still in a massive bullish trend. Other interesting math inside the price action is the volatility continues to fall in Bitcoin itself. Bitcoin historically been known as a higher volatility trade. Not so much. 25 realized volatility in the last 30 days here in Bitcoin puts it in a little bit higher bracket than gold, significantly less than natural gas. It's still less than crude oil when you're looking at that realized volatility. A little bit higher than the NASDAQ currently, but it's in that 3 percentile of what the volatility reading has been over the last year. Also, from another data standpoint, the CME Futures positioning in Bitcoin has been some of the lowest in a year. Week over week, positioning actually came down, and a lot of speculators that were short Bitcoin have closed their positions. That sometimes signs up for more consolidation before a further uplift. To me, I think we're kind of like in this trading range currently today, 112 to 120, as a result of that volatility regime. You get bigger volatility, you get bigger price action to the upside and the downside possible. 1 year Z score, I know CME Futures, -1. So that is a bullish catalyst. Off topic from Bitcoin, but as it relates to the AI and technology revolution, a popular company, I don't really follow a Palantir. It's more of a military defense contractor, but it's out last night with earnings $1 billion in the quarter, massively clapping the hands for what AI has done to its business and what it will continue to do to support free cash flow without the overhead, historic CapEx expenditures, like I say, buildings, HR, all the XX expenditures these companies will no longer need. Now they need to redistribute that capital they're going to have more of. Instead of those traditional CapEx, Bitcoin, these other plays become more essential for the capital spending needs of these companies return to shareholders. That's what I got for you today. I will see you tomorrow. Have a great one.